It's Thursday, October 13th, 2016. This is Ron Feinstein, the Consummate Price Behaviorist at New Wave Forecasting. Starting off with NatGas today. How about that move? We were talking about this courtesy dip here for the last couple days. The only thing that didn't happen was a total washout of the 315 level. Other than that, it was just textbook. We came down to within pennies of the 38% retracement and the previous low, which is exactly what we were looking for. Now we've made a new high, and this should be it. This really should be a terminal wave here. So we'll see if the market continues to extend. We could be looking at something much more bullish, but I don't think so. So again, for now, I'm going to stick with the idea that this market ought to be topping an A wave up here, and if this is correct, believe it or not, the next move of significance is going to be back down. It's not going to be a surprise if it plays out that way. So in any event, I think we could retest today's lows. Let's just say that much. If we fail anywhere between here and 340, I think we have a chance of revisiting the 320 level again before moving significantly higher. Okay, turning our focus to the crude market. This one's all I can say is it remains to be seen whether or not the dip that appears to be complete was a bullish wave 4 correction or a bearish A wave of a larger ongoing correction to the downside. And it's a tough call here. I just don't know. I would be cautious. The closer we get to the 76% retracement, which is just about $51 here in the November contract, a little above, the more inclined I would want to be probably just not to be involved here because the risk will be quite high on either side of the market at that point. But again, I could certainly understand how somebody would be looking to approach this market from the short side. It really is not unreasonable given that the bulk of this move was all about news. And not that I pay much attention to the type of things that I read, I did notice that the OPEC production is still huge. So they're trying to talk prices up, but they need to pump. So it's a tough call here. Just we'll see if we can follow up real time in the morning. Okay, interestingly enough, when we talked about the 10-year on the video real time last night, the market was trading right at that 130.08 level, and I noted how that was somewhere around here. I think it was important resistance. And so anyway, I think this is a bottom, and I think we are probably in a triangle right now on this time frame, which could certainly run in through tomorrow, and then we ought to continue to resolve to the upside. So I like the long side of the notes here. If the market moves more sideways than up, then it could turn into a chart pattern base. So again, at the moment, I think the market's going to do better, but open-minded. If we start to come off, and I would think even trade below 129.26, I would be very concerned. So at the moment, I like it, but it's not the better ranch kind of scenario on that one. Okay, the euro currency did come right down to the previous low and bounced, which is hardly a surprise, and it's actually what I thought exactly was going to happen. The 38% retracement off this last decline is right around the 111 big figure here on this December contract, so I gotta say, until we can demonstratively push above there, that the bears are still in control. Whether or not the market is just now coming off a test of the lower end of the range and that's it, is a much bigger question. So I think by and large most of the players are going to think that 111.70 give or take is really the important place, but to me I think 111 give or take is really much more important on the near term. Okay, the biggest problem with the triangle scenario that I've been working with in gold for the last couple of days is now everybody in the world is going to see it. So I have to say that that does cause me some concern, or it could still be a triangle and it might not play out exactly the way that I was hoping. But all I would also offer up is if that I was a gold bull and this is the best that the market has done for me, I might be a little nervous. Gold platinum has also dropped to, I believe, under 3 more than 300 under, which is also really bearish. So I still think that the best guess here is that this market is going out the bottom, probably towards 1225. But keeping an open mind here again, well, 1267, the high of this consolidation. Prices move above there. Just stand back and give it a wide berth on the upside. Okay, let us turn our attention to these stock indexes. The 2115 level, give or take, was the 76% retracement that I had been forecasting for this presumed three-wave decline. And we did overshoot fairly significantly here, but this is the S&P, and it's an all algo kind of world. We had good RSI divergence here on this low. I think it's a bottom. What kind of a bottom? That's another question altogether. I don't know how many people are going to try again to sell it here near 2140, assuming the market can continue there. But I think we are already likely on our way to 2155. So keep that in mind. That I think the best bet is that this market is still in consolidation and not likely going anywhere dramatic. So I'm not sure what it would take to really turn this thing down. I suppose if we were to fall below 2110 and really start to collapse, then we'd have to respect that. But right now I think the best bet is that we've just seen the lower end of a trading range, and we could now chop our way higher for the next 30 points or so. Okay, concluding the session with the E-mini NASDAQ. We did not quite make the 62% retracement on the market's early weakness here. We had a good recovery, came back up through, spiked above 4,800, but did settle back below there. I'm not convinced that we've turned up on this just yet. I think if we do trade above 48.15, I think pretty much today's high where the key moving average is now coming across, that would be more than ample indication to me that suggests that we're probably going to see at least 48.50 and maybe 48.80, and it probably could happen fairly quickly because I do think everybody's pretty much short here. So this is the kind of thing where this could turn into a big bear trap down here. So this is what we want to be on the alert for. Well, everybody in the world is talking about how the market is once again likely going to collapse. We could very well just be setting up a spring situation that could who's to say, just send prices higher over the near term. So if the market's already turned up, I think 47.70 ought to be support, because we would argue then that we've already got a smaller bear trap inside what could be this bigger bear trap. So we could have a couple of little nestings of traps inside here, which makes for an even more compelling bullish scenario the way I look at it. But again, we'll just have to see. I would say move above 48.15, good indication that the E-mini NASDAQ has seen the worst for now, and do not be surprised if the market rallies very fast. If we've sold everybody out, that's exactly what could happen now. So again, that's it. Ron Feinstein, Thursday, October 13th, 2016. New Wave Forecasting. Back for Monday's market action on Sunday.